Welcome to Herefordshire Means Business Networking Online. My name's Rich. I'm one of the team here at Herefordshire Means Business. With me, I did have, and there she is, I have Kim, give us a wave, Kim, Richard, and Kerry. We're the team at Herefordshire Means Business. And we've also got our guest speaker with us today, Sharon Pocock. We'll come back to her in a sec. It's good to see some new faces with us and some returning faces. Mary, it seems like ages since we saw you. Hope you are well.
I am, thank you. It's very nice to be here at last.
Good. And we've also got Jim from the FSB. Hopefully at the end we'll let Jim have a word and introduce himself to all of us here. If you are watching the recording, we have these meetings once a month. And hopefully we'll be continuing those into the future. If you are with us, welcome. In the chat, if you want to continue networking after the meeting, if you want to put your LinkedIn details or anything like that about yourself for the rest of the people who are attending to see, what I'll do after the meeting is I send an email out with a link to where the recording is and also a copy of the chat so you can all see everyone's details in there afterwards. Okay, I've got a few notices that I will hopefully fit in at the end, squeeze in at the end, but without any further ado, I think we'll go straight on to our speaker. So Sharon Pocock from Kinder Pocock Digital Accountants. She has been recently named one of the global top 500, no, 50 even, women in accounting. And it's really good to have her along today to talk to us today about cash. And I think I'll leave Sharon to explain the rest of it now. If I can manage the technology to make you a co-host, you should now be able to take over. Sharon, it's over to you.
Well, thank you so much. And thank you so much for inviting me to speak today. Can you all hear me all right? Fabulous. Okay, so I've got lots of slides I'm going to show you, but feel free to put questions in the chat, and I'm going to, as we go through, I'm going to put links in the chat too. I'm going to attempt to multitask. So let me just share. So what I'm going to share with you today is, can you see that? Can you see my how to boost your business cash? Perfect. Okay, so normally this is like an hour's session, so I'm going to definitely, it'll be a whistle stop tour, but we can probably share the slides after. So yeah, feel free to ask questions, and I'm going to share lots of top tips. So definitely, if you've got ideas or ways that you're boosting your cash or you want to contribute, please feel free to do that. That would be amazing. So we are Kinder Pocock. We are digital accountants. What does that mean? Everything we do is online. We've got no servers. We're paper free. We use loads of apps like Xero and Dext, used to be Receipt Bank, and all sorts of other apps to make your business life simpler. And got lots of core values that we work with every day and live by, really. So these come into everything that we do, including our hiring process. So we are hiring at the moment, if you want to check out our careers page. So that's us. So straight in with our cash session, thought for the session. The fact is that one of the earliest lessons I learned in business was that balance sheets and income statements are fiction, not friction. Cash flow is reality. So who's heard that before? Turnover is vanity, profit is sanity, cash flow is reality, or cash is king. So how many times has your accountant discussed your accounts with you and shown you your profits, but you're thinking, I don't have that cash in the bank? So anyone want to put their hand up? It's a moment of frustration, and we talk about this all the time. So today is about challenging you to become more aware of your cash flow cycles, cash in and out of the business, and how you can do things differently. And with the pandemic and the challenges, everyone's experiencing different challenges now more than ever. Is so crucial to get a handle on your cash and understand how it's flowing in and out of your business. Most business owners pre-COVID would strip all the cash out of their business, sort of a lifestyle business. A lot of people would do that, and that would be normal. But obviously, that's not good practice now, as we're in survival mode and coming back out of this crisis. So I think there's lots to be learned from the pandemic, and having a good cash reserve is what's going to keep us going. So throughout this session, I tell you what, as well, before I go any further, make sure you take notes. I reckon I've got over 50 top tips for improving your cash. So feel free to make notes. Feel free to jot down any blinding flashes of the obvious, and then I might challenge you to share them at the end if you want to. What's really, you know, like a real light bulb moment for you. And at the end, I'm going to, obviously you don't need to share, but challenge you to think about 3 actions that you're going to take as a result of today's session. So the 5 principles: without cash, your business won't survive. Cash is the lifeblood of your business. Without cash, you won't survive. And even profitable businesses can fail because the cash flow is poor. We'll get on to the difference between profit and cash too, so that is clearer. But yes, you can have profits and still fail. When a business is growing fast in startup mode, it needs working capital to fund that growth. So that's basically cash to help things, keep things moving, because you need to pay for things. You need payroll, stock. You need to be able to pay for the growth of your business, or at the moment for the survival of your business. And business processes are key. We're going to look at business processes today, ways that you can tweak your processes to improve your cash. And some of you may have completed a cash flow forecast for the bank or for some kind of finance or lending. That's generally, historically, what we would be asked to produce cash flow forecasts for clients for, was for funding from the bank. But actually, that's like that again is critical mode. You should have a cash flow forecast anyway. Every business deserves one. So this should be something that you have and you can check on as you go through. Because doing a cash flow forecast just for the bank, that is not going to fix any of the problems. You can stick a plaster on a big gaping wound, but that isn't really going to help you. It's fixing the underlying problems and getting that right first. So that's what we're going to cover today. And you've got to be prepared to make some changes. Some of them may be big and scary, some of them may be just small tweaks, but insanity is doing the same thing over and over again. That's an Einstein quote. So having more control over your cash, having more visibility over your cash is going to reduce your frustration and your stress levels massively. Okay, so quick agenda. Difference between profit and cash, that's key. There's 8 ways that we're going to go through to boost your cash flow, and within each of those we've got lots of ideas, and that's where I would encourage you to offer. If you've got top tips, share them if you want to, either in the chat, or I'm happy if you come off mute as well. I think, yeah, it's a way of getting more out of it. Then next steps, and then there'll be a chance for questions at the end, but honestly, if you want to ask questions as we go through, that's fine. So the biggest problem, before we move on to the next slide, is FTI. Who's heard of FTI? Failure to implement. We could do all of this, go through all of this stuff and write down what you're going to do, but then not do anything with it. So the key thing is to actually make a difference and put things into place. And I think when you're looking at things that need doing, the most powerful way of doing that is who needs to do what and by when. If you just say you're going to make improvements, it's like having SMART goals. If you're just going to make improvements, they probably won't get done unless you assign them to somebody. Be specific about what needs to be done and give it a deadline. Okay, so let's get going. So first of all, who does read their financial statements from the accountant? or do we just sign them and tick them off? It's okay if you don't look at them. What we like to do with clients is make sure that we're working on their figures through the year and talking through the year, so that the statutory accounts at the end of the year is just a box ticking exercise. But it is important to understand your figures. And who understands the difference between, I can't see you all, I'm asking questions and I can't actually see you all. Who understands the difference between profit and cash? You might have had that moment, thank you, Jim. You might have had that moment where the accountant is saying, but this is my profit on paper. Why doesn't that agree to what's in the bank right now? So profit is the money left once expenses are paid. So let me move to the next slide, it'll make more sense. So I mentioned before, a profitable business can go out of business if it doesn't have enough cash, but a business making a loss can survive because perhaps it's got loans, perhaps the owner is putting money in. You never know. Just by looking at the profit and loss account and looking at the profits or the losses, that isn't enough. So profits are worked out based on the invoice date. So the date that you invoice your customers, or the date that your suppliers invoice you. It's your sales less your stock if you're producing goods or selling goods, and then less your other expenses, your running costs. So what's left is your profit. Sales less cost of sales, cost of stock, and less expenses is your profit. Whereas cash is looking at cash flowing in and out of the business. So the two are quite different, and I will explain this a bit more visually. So bear with me. I'm going to just show you some examples of what affects profit and what affects cash. So VAT. If you're VAT registered, you have to make payments to the VAT office once a quarter. Does that affect your profit or your bank balance? It does affect your bank. Your profit and loss is worked out excluding VAT. So your sales excluding VAT and all your costs excluding VAT. Loan repayments. Again, they're coming out of your bank, but loan repayments don't affect your profits at all. Interest, though, that is coming out of your bank with the loan repayments, and it's also coming off your profits. Is this making sense so far? Asset purchases, so this would be like equipment, laptops, machinery, vehicles. Vehicles is a loaded topic in itself. We won't get onto that today. They don't affect your profits when it comes to working out your profit and loss, but it is money coming out of the bank. Asset sales, again, this doesn't affect your profit, but it is money coming into the bank account. So there's a lot more affecting your cash balance than is affecting your profit on paper. Depreciation, who understands what depreciation is? There's some hands, thank you. So depreciation is when you do buy an asset, for accounting purposes, we have to calculate how that is losing value each year. So it's a paper calculation, and it could be, as an example, my computer is going to last 4 years if we're lucky, so I'm going to depreciate it over 4 years. So if it costs £1,000, my depreciation on year 1 is 250, and so on. So depreciation does affect your profit, but it's not tangible. It doesn't go out of your bank account. Have I bamboozled anyone? Has anyone got any questions? Hopefully that makes sense. Let me give you an example. So let's say this business has made a profit of 50,000 and the owner thinks, brilliant, 50,000 cash in the bank to me. Thank you very much. But let's have a look. So based on what we were looking at earlier, we've got a £50,000 profit, but through the year we've paid 10,000 to the VAT office. We've made loan repayments of 12,000. We've bought assets of worth 5,000 through the year, but we've also sold assets of 2,000. So apply that to your business. That could be anything. It could be sewing machines, it could be printers, it could be vehicles. So what's left after all that's come off is only 25,000 left in the bank. So if that business owner had taken the full £50,000 out, they would have been in trouble. Because if we take, obviously that there's lots of reasons that would put you in trouble. It would put you in trouble with the bank. Are you now in overdraft? Do you now need to get finance? But also if you're a limited company director and shareholder, if you take more out of the business than the business can afford, that becomes illegal dividends. So if you then owed the tax office and you couldn't pay them, but you'd taken dividends out of the company, the tax office can come after you personally for those dividends because you've taken that money out before paying the tax office. Does that make sense? Bit scary, but worth being aware of. Does that all make sense? I'm not seeing any questions in the chat, so I'm going to carry on. So the next thing we'll look at, I do appreciate there's lots of numbers on here and we'll give you the slides afterwards, but a quick way that we can look at improving cash is what we call the working capital cycle. And this is how cash is moving through the business. So how quickly we're paying suppliers, how long customers take to pay. So in this example, this is a manufacturing company. So here's the example. We've just got a few numbers: sales 1.5 million, cost of goods, overheads, accounts receivable, inventory, and so inventory is stock, and then accounts payable. What we know from this is if we reduce their debtor days by 9, so debtor days are the number of days on average it takes your customers to pay you. So you may have a 30-day payment term with your customers, but actually they may be taking 45 days to pay you. So what we're looking at is if we reduce the debtor days by 9 days, reduce our inventory days by 6, so this is 6 days less that we're holding that stock, that's going to increase this business's cash by £52,685, which is phenomenal. It might be 52,000 off the overdraft. It might be 52,000 in the bank, and then think about what you could do with that money. So it is just a by just making marginal gains, very small improvements, you can make quite significant improvements. Okay, so there's 4 ways, top 4 things to help improve your cash. Understand your cash flow better. Prepare a cash flow forecast. Who's got one of those? A month-by-month cash flow forecast for the 12 months ahead. So we would always say, get a cash flow forecast and prepare it alongside your business plan for the year ahead and be monitoring it regularly. You should also incorporate this cash flow forecast into your accounting software. So we're massive lovers of Xero, as is Rich. So it's quite easy to use the budget manager in Xero to put your budget into there, and you can do a basic cash flow forecast in Xero, but we use other software like Float and Spotlight to create a cash flow forecast for the year. But what you can then do is by having it in your accounting software, you can monitor what's actually happening with what you planned or budgeted to happen. And that's key. Anyone can do a business plan, anyone can do a cash flow forecast and stick it in the drawer or save it in a file on your computer and never look at it again. So I think by incorporating it into your software and your current reporting, it's going to be much more meaningful. You can look at what's happened compared to what you thought was going to happen and then take action accordingly. Oh, went too far. So having a cash flow forecast is one thing, but using that knowledge to look at how your cash flows in and out of the business is quite different. So by having a cash flow forecast, you can then set an improvement plan. So as I said before, what needs to be done, who's going to do it and by when? And this is what we're going to be looking at today, things that you can tweak to improve that. And then you've got goals that are set, and then Number 4, most importantly, have someone independent to hold you accountable to the plan and your goals. I could easily say I'm going to climb Kilimanjaro. How am I going to do it? Who's going to hold me accountable? When am I going to do it by? What steps do I need to go through to get there? I'm not suddenly going to arrive at the top. I'm not going to do it anyway. That's a bad example. But you've got to have a plan in place. And by having somebody to hold you accountable, you may not do it if you're on your own. But if you've got someone nagging at you, that is the way to get ahead. It doesn't have to be your accountant. It should be someone independent, maybe not your spouse, because they're going to possibly be too soft on you. So a business coach. Who's got a business coach? Brilliant. Fantastic. Okay, so let's have a look at the 8 ways to boost your cash flow. I've got a slide for each of them with lots of different things for each one. It is going to be a whistle-stop tour because I am watching the time. We're going to go through each of these, make notes, and I think the key thing is to think about your business and things that you can do with your business. All right. Okay, the first one, increase your sales levels. So I've got some ideas for how you can increase your sales levels. We haven't got time to dig into them all today, but it will give you just, I think, a teaser into what's possible and give you some starting points. So let's get going. Increase customer, gone too far, retention rates. So this is keeping customers in your business. It costs 6 times more to market to new customers as it does to existing customers. So what are you doing to surprise and delight and wow your existing customers? And by having happy customers, they will refer to you. So there's lots of reasons why you would want to retain your customers. So have a think about what you can do to increase your customer retention rates. How are you fulfilling their needs? How are you being proactive and provide extraordinary service, not just a service? How can you generate more leads coming into your business? This is all about your marketing. So again, we're not going to get stuck into it, but how can you draw more attention to your business and get leads coming into your business? Could be social media, could be content. Top tip, They Ask You Answer, amazing book for writing content. It focuses on the client being key and answering your clients' questions before they ask them, really. So again, 70% of potential buyers or inquiries, they're looking you up online before they even make contact with you. So if you're already answering their questions, they're going to come to you. So find out what your customers want to know about. Read They Ask You Answer. It's fantastic. It's changed the way that we do our content. Yeah, so one of our our 2 most popular blogs are Starling versus Tide, because we got asked that question a lot, and should I buy an electric car through my company? If I've got time, I'll share the links, but they're our most popular because it's the questions people ask. Okay, increase conversion. I'm clicking too far. This is very annoying. Increase conversion rates. So when you get leads coming into your business, how can you convert those leads into paying customers? What can you do in your business to convert people interested into people paying you? There's a whole webinar around that, I'm sure. But what can you do in your business? Done it again. Increase transaction frequency and transaction value. So how often are your customers buying from you? What can you do to increase how often they're buying from you? And what can you do to get them to spend more each time they buy with you? So if you go in a restaurant, that's a really good example of upselling in most restaurants. They'll recommend what goes well with your dish. Would you like fries with that? What drinks would you like? should be, if they're doing a good job, looking at or offering suggestions of what you can have with your meal, and then coming back to check everything's all right. Would you like another glass of wine and all that stuff? So what can you do in your business to increase how often people buy and increase how much they spend each time? And finally, this not necessarily sales, but it's an income, drives your income. So there are lots of tax reliefs and grants available. Make sure you're claiming all of the COVID grants that you can. There's also, I'll find the link in a bit, the Birmingham Growth Grants. The one session is closing today, but there's a new funding round opening on the 14th of June. So they're mainly business to business. Let me find the link. I had it up earlier, I've closed all my tabs. So look at different grants. I'm going to put the link in the chat just a second. There's a link there for hopefully Birmingham. It's a bit of a long link, but it's the business growth programme. And also things like research and development. If you're doing things that are innovative and fixing technological or scientific problems that no one else has been able to fix, then you could be eligible for research and development tax relief. So have a chat with us about that. And then there's the super deductions as well. Who's heard of the super deductions tax? Let me find the link. Basically, if you're a limited company now, you, instead of being able to take the full cost of any asset purchases off your profits, you can now take 130%. So being aware, I guess having a good accountant will help you with all these things, but look at tax relief and grants to help you with your business. Has anyone got any top tips to add? Okay, so next one, improve your accounts receivable process. Invoice faster. This is a key thing. I still see lots of people who are waiting till the month end to invoice. So if you are doing work for somebody, invoice the minute that you've done the work, or preferably if it's a long project, get payments up front or do stage payments. So definitely invoice quickly. Make paying easy. So how are people able to pay you? If you're sending invoices, can they click a link on your invoice to pay now? So with Xero, you can send your invoices out straight away. And then let me add some links. And then you can also add links for things like Go Cardless or Stripe so that they can pay you straight away. Review, oops, done it again. It's the heat is making me click too fast. Review terms of trade. So what are your payment terms with your customers? The reason people have 30 days is to take account of posting an invoice, your customer writing a check, posting the check back to you, you taking a trip to the bank. There's no reason you need 30-day payment terms, but obviously you need to agree with your customers. So just review how quickly people are paying you. Do you want to give discounts for prompt payment? Be careful with that one, because obviously you don't want to discount too much, but is it worth having discounts so that people can pay you quicker, to encourage them to pay you quicker? And review your chasing process, credit control. How are you chasing people? Sending a statement infrequently probably isn't going to work. Picking up the phone is probably going to work. Who knows at the moment exactly which customers owe them money and how much? Does anyone want to hold their hand up? So again, with things like Xero and Go Cardless, and Chaser is a brilliant app for chasing overdue invoices. I'm copying and pasting some links. Yeah, they're really useful. So Chaser sends, I swear they go out with magic fairy dust. It sends automated invoices to your customers that owe you, but it'll send before due emails. and it will send reminders, overdue, very stern overdue, legal overdue, and all those things. So, and it happens in the background as long as your zero is up to date. But you want, so what I've just put in the chat are, I'm not sure if you can copy them from here, but a link to our Zero blog, a cardless blog, and then a chaser blog. So those are all brilliant ways of improving your accounts receivable. Monitoring and forecasting as an accountant, this is my most favourite and I think most important bit. It's really easy not to keep your bookkeeping up to date and not reviewing your results, but how can you manage your business, get it back on track, and even grow it if you don't know how you're doing? So I think it's really key that you're looking at this. So understanding your 7 key numbers, this is a separate thing that we can help you with. Instead of looking at your profit and loss and all the numbers that your accounting software will throw at you, there are just 7 key numbers in your business that you need to be aware of. Core cash is a key one. Do you know what your core cash target is? It's your taxes plus 2 months overheads. So again, we can help you work that out. Make a plan. So we talked about this earlier. Make a plan of where you want to get to and how you're going to get there, because without that, you're not going to achieve where you want to be. Set a budget and a cash flow forecast we mentioned earlier. This is really key to make sure that you know. So you're setting a plan and then the budget and forecast will follow on from this. Definitely keep your accounting software up to date so that you can see how you're doing, and make sure you're monitoring this regularly. So I have, hang on, another link to put in. So this is a bit about your 7 key numbers in the chat. So this, you can do all the things and all the things that we're talking about and the ways to boost your cash. But if you're not monitoring, how do you know the areas you need to improve on? And how do you know if it's working? So monitoring and forecasting, absolutely key. Review your debt and capital structure. I realise I'm going really fast, aren't I? Is it all right? Because I need to get it all in. Review interest rates. This is a key one at the moment. And I think with your loans that you may have taken out last year, they're becoming due for payment now. So you can arrange with the bank to pay your bounce back loans over, say, 10 years instead of 6, or you can have payment holidays. Just be careful what the costs are. Have a look at interest you're paying across everything, not just loans. Look at credit cards, look at APRs on things like insurance, leases, all the things. It all adds up. It's marginal gains. If you can just save a tiny percentage somewhere, it's going to help with the bigger picture. Look at loan terms and how long you've got to pay. Look at how much you're taking out of the business. Is it sustainable? Is there a better way of doing it? Is it tax efficient? And just be careful, especially at the moment with business. Maybe if your business has been closed or affected, how are you taking money out of the business? Can you limit what you're taking? If you can, it needs to be short term, and think in the future about how much you do need to take out. Look at new investment opportunities, potentially from outside investors, but there's lots that you can be doing. And look at the bank that you're with. I know we've had Jade on these webinars before, Jade at Starling Bank. So quick link about Starling. We love Starling Bank. Even though it's all online and you have to download the app to open an account, the chat's really good and there's real people that set it up. So it's a good, we like Starling. Not sure if anyone's got any other views. Other banks are available. So similarly to your accounts receivable, you do need to look at how you're paying people. Check, have you got any late payment penalties anywhere? Because this is just wasted money, isn't it? So are any of your suppliers charging you because you're paying them late? What can you do to stop that? This includes things like the tax office. So if you're paying your taxes late, Instead, arrange time to pay with the tax office, because you'll avoid penalties there. There may still be interest, but what you don't want is lump sum penalties that they're throwing at you, or late filings for, say, VAT returns. Don't do any of that either, because it's just wasted money. So look at where you've got late payment penalties. And you've got until, I think, the 21st of June to arrange time to pay for the VAT that was deferred last year. So I'm just going to throw a blog in about how to arrange time to pay with the tax office. Negotiate for prompt payment discounts. Be careful here though, because if you're paying suppliers quicker, that means the cash is going out of your account quicker. So just be careful if we're trying to increase the time that we're keeping hold of our cash. So be careful about prompt payment discounts. Look at the benefits and the costs with that. Make sure you've got budgets in place. I'm repeating myself now, Anna. You can see there's a theme. Make sure you're monitoring things. Review how you're paying people. Make sure that you're not having any penalties or interest charges for paying late, and look at how long it's taking you to pay, and is that working. And look at your supplier agreements. Now's the time, if you haven't done it, is to renegotiate with suppliers. Look at new suppliers, alternative suppliers. Look at what you're paying. Can you get not prompt payment discounts, but discounts in general? But just be aware that all businesses are going through it at the moment. So be careful if you're asking for discounts. That's another business that you're affecting. And obviously, if they're trying to, if they're offering discounts, that's going to affect their business as well negatively. Boost your gross profit margins. This is a key one. So your gross profit margins, this is what's left after your sales less your cost of sales. So any costs that are very specific to making that sale. So it could be materials, it could be products, it could be labor. Actually, if you're a service business and you've got people actually performing the work to sell on, to sell their services. So there are all sorts of ways that you can save time and money by having good, effective systems in place. If something feels like it's taking too long, it probably is. So it's possible that you could automate it and get different software systems to talk to each other. So definitely worth looking at. We work really closely with an app advisory company, and they will go in and do a process mapping session with you. It's like counselling, like what is working, what isn't working, and go through all the processes from start to end in your business, and then look at where you can save time. Reduce errors. So if you're wasting products or throwing things away, or you're making errors and work has to be redone, that's all money down the drain. If you want, that's all squeezing your profit margins. So see what you can do to do the job right first time. Investigate where there are errors and why, and look at how you can reduce your wastage. If you have got wastage, can you do something else with it? Can you turn it into a different product? Capture and build time better. So if you're a service business, or even if you're manufacturing and you have people spending time on making those products, how long are they spending? Where could you get them to be more efficient? We're repeating ourselves now. Negotiate discounts for prompt payment is a good idea. But again, as I said, with discount, if you're asking another business for discounts, you're affecting their business and how they're doing. And yeah, look at alternative suppliers as well. Inventory. I'm quite conscious of the time. It's 1:45, but I'm going to keep going. We're nearly there. Control your inventory. So your stock process, if you are holding stock. So have a look at stock ordering system. We do talk to businesses where someone will order a load of stock in, but they've already got that stock in the warehouse, but the person ordering didn't know that. So how are you ordering stock? Where are you ordering it from? What prices are you agreeing? If you've got different people in the business ordering stock, how are they doing it? How are you talking to each other? So this is another way where technology and processes and systems come in. Yes, technology. So looking at how you're managing and monitoring stock. And again, you don't want to run out of stock. So how do you know when you need to place new orders? And I think with the current challenges we're going through, don't just order the same levels that you ordered last time, because does your business need that amount of stock? If you're just reopening or not properly reopened yet, then just be careful, look at the quantities you're ordering, and good technology will help you to do that. What happens with slow moving stock? How do you deal with that? Make sure you're documenting have a good stock control process, document it, and make sure your whole team understand what that means. So it's one thing, we might all be guilty of this. I'm forever like doing things and creating new processes, but you've really got to communicate that with your team and follow up and make sure that they're doing what you want them to do, and everybody is on the same page in terms of stock, whether it's ordering, pricing, monitoring, all that stuff. And stock shrinkage, this is a big one. This covers all sorts of things, whether it's theft, things going out of date, all sorts of stuff. So just look at stock shrinkage and what that means to you and how you can manage it better. And finally, I'm hoping you're writing some tips down and hopefully you've got some tips so far on how you can improve things in your business. So the final one we're going to look at is reducing your overheads. So historically, we'd say review your costs annually. I don't think that's enough. So this is previously, when we're looking at gross profit margins, that's specifically costs relating to selling. So now we're looking at overheads, different task, different area of the business. So this is all your overheads, rent, insurances, software is a big challenge. I think it's really easy to take out software subscriptions and not be using them, or have too many users you're paying for, or too many features. So have a look at that, but review your spending. What are you getting a return on? Do you need to spend it? So look at your bank statements, look in zero if you're using it, but do it at least every 3 months, I would say. And actually do that on your personal bank account too. What are you spending and do you need to? Going paperless and digital, that should be saving you money. So you're not shuffling paper around. It's going to improve your processes. You'll be able to automate more things, integrate more softwares together so they're talking to each other. Something we can definitely help with. What's your return on investment for each spend? So look at what are you getting back for the money you're spending? Can you get a better deal? Again, negotiate with suppliers. How are your staff spending your money? So we've got another top tip in terms of apps. So I mentioned Dext at the beginning. Dext, or used to be Receipt Bank, is a great way of managing your supplier invoices and expenses. So it extracts the data from your supplier invoices and then it will push it into Xero. And Soldo, I'm not sure if anyone's come across, it's a prepaid MasterCard. So you can set budgets and you can stop people spending in certain areas. Like you could have an employee and then they can't spend in any restaurants or bars. You can block it at certain times of the day, but you can have budgets in place. So you could have a Soldo credit card for your marketing budget. We've got one just for software subscriptions. So there's lots of ways that you can control what your, you and your staff are spending. Oh, back. Definitely have budgets in place as well for everybody, and review your organizational structure. this is a big thing, isn't it, with furlough and unfortunately lots of people making redundancies, but you've got to do everything you can for your business to survive and thrive. So review who you've got in your team, what are they doing, and make sure that you're getting the best out of them and everyone's efficient. And who do you need? With an organisational structure, what you'll be doing is looking at roles and responsibilities, not people. You don't put names on the tasks. Has anyone done one of those? Organisational review. So it's basically all about the tasks, the roles and responsibilities, and then you can group things together, and then you look at your people and who can fulfill those, and have you got any gaps? Okay, massive whistle stop tour. Taking a breath. Your next steps then, have you found 3 most important actions that you can take? So we've gone through so many things. If you can pick 3 things that you could go away and put into practice after today, that would be amazing. So what are you going to do after today's session? Will you do nothing? That was an interesting seminar. I think I'll just carry on with what I've always done. Are you going to retreat? That sounded a bit scary and hard. I might have a go, but I'll probably go back to the business and hide. Are you going to take normal amounts of action? I think I need a cash flow forecast, but I can do it myself. So that might mean that you're not going to do anything at all or retreat. Or are you going to take massive amounts of action? Are you going to actually get it done, go out and get the help that you need, and get a plan in place? So I've got hang on. We can help you with some of this stuff. So we can go through your 7 key numbers. I won't read them all out, but these are just some of the services that we can offer. And we can just do a complimentary quick call with you as well if that would be of interest. And I'm just going to put in the chat just a questionnaire which will just asking you how today was, and if you want any help from us on any of those services. So feel free to fill that in. So there's lots of ways that we can help you with that. And I've shared some blogs with you as well, but I will share some through Rich as well. So, and I'm not sure if you're aware, we've got a private Facebook group, our newsletter, there's one going out on Friday, and we've got a COVID support page. So I can put them in the chat. I realise I'm bombarding you with things. So just take what you want to. Hang on, I had one more blog, I've lost it. There we go. But I will end on the 3 most dreaded words in the English language: negative cash flow. So what can we do to boost our cash and turn that into a positive? Do we have any questions?
Right, great, Sharon. Thank you.
I'm going to stop sharing.
Definitely a whistle stop tour. I'm sure we could have gone on for a long time with that. I hope everyone's made some notes there. Like we said, we'll get the slides off Sharon, and we'll put them in the email later, and maybe put some links on as well onto social media. That's brilliant, Sharon. Thank you. We've probably got time for one quick question. Has anyone got a quick question? No, I think everyone's deep in thought of what they're going to do first. Okay, I've got a couple of information posts for you, but the first thing I want to just quickly do is I've got 3 questions in a poll. We did this at our last online meeting, but we're still umming and ahhing about face-to-face meetings going ahead. So we want to try and get some more feedback. We're going to be doing these on our social media channels as well, but I've got a quick poll. This is the first question. So if everyone could just give me an answer to these questions. I've got 3 questions. So this is the first one. So if everyone could just quickly click on this. I know I'm short of time, but it'd be really good to get some feedback from people. Nearly there. That's brilliant. Okay, thank you for that. And I can work on that. I've two more bits of information. The first one is Adam Brooks, who some of you who've been to our online meetings before will know. He is doing a skydive. I'll put a link to his information on his Facebook post about it. He's trying to raise some money for Winston's Wish, which is a charity close to home for him, and he's wanting to get people to donate. You can either donate, let me just find the link again. You can donate £10 for him to land safely, or £20 for him to hit the dirt. So he's trying to raise some money there. So if you want to have a look at that, there's a video on his Facebook page. I've put the link in there. And the other information from me is Ange Tyler from the Eli Memorial. She's not able to be with us today. She's at an event, but she has a cycle event that she wants to promote. What I'll do is I'll put the information about that into the email that goes out so that everyone's got the information about that. So she's got a cycle event and she's got some other events coming up, but I want to just mention that. And just really quickly, it's really good to see Mary from the Air Ambulance with us. Mary, did you want to just quickly, a quick update about the Air Ambulance?
Well, there's a huge amount to say, but well, we of course have been carrying on working during the pandemic, but haven't had much money in, so we're all struggling to do things and celebrate our 30th birthday as well. So if anybody's got any virtual ideas for fundraising, we would be really grateful. Personally, I'm there 2 days a week now instead of full time, but hopefully that will change over the next coming months. And we just need to, yeah, if you see us anywhere, support us, really, please. Keep it flying.
Thank you, Mary. And Jim from the FSB, he's our new FSB bod. Do you want to just introduce yourself, Jim?
Sure. Thanks very much. Yeah, I'm Jim Moffat. I'm the FSB membership advisor for Herefordshire and Worcestershire, and I've been doing this for about 6 months now. And grateful for any opportunities to network with people in Herefordshire. So what the FSB does, if you don't know it already, I know a few of you do, that we save the owners of small businesses time and money and lower their risk. We're of particular value to people who have younger businesses, probably less than 3 years old, especially people that are setting up businesses, less than a year old. So and that's primarily in the areas of legal and insurance. So that's us, that's the FSB. And happy to have a chat. I popped in my details in the chat window. Happy to have a one-to-one with anybody. Thanks.
Brilliant. Okay, great. Good to see you, Jim. Okay, we're coming up to 2 o'clock. I like to finish on time, so it's really good to see everyone. And if you're watching on YouTube, hello to you too. We'll be back in a month's time, and maybe, hopefully, you may see us face to face coming up soon, either in the autumn or maybe in the summer if we get there. Fingers crossed, we'll get some changes. But good to see everyone. Thanks for attending, and we'll see you all again. Bye-bye.